going? So, welcome to another episode of Unscripted. And after a couple of technical difficulties, we managed to make it all work. So, welcome, Jason, David. Thanks very much for joining me again for episode one. And before I get started, let's clean our palates a little bit. And is there anything interesting that happened in the past, couple weeks since we last talked in the space of cyber insurance? And we hear, for example, Chat GPT coming up on a regular basis, and AI. There's a lot of doom and gloom out there. Do you mind chiming in to just give us a sense, if there's something going on, if the cyber insurance space is looking into this as another vector of attack?
I mean, Jason, you can. I'll let you go on the technical side definitely first.
Yeah, I think there's a lot of concern overall. Where are these attacks going to go, right? And I think it's still early stages, but the thing that scares me the most is around the automation of these attacks. Now, the thing that's scary there is not necessarily that it's going to be a complete game changer in how attacks happen or anything like that. It's more so going to be along the lines of how can this quickly allow other hackers to automate and basically get from start to finish, right? So if we look at a typical ransomware attack, you've got a scenario where they've got it down to a manual process where say in 4 hours after getting access to an environment, they can encrypt an entire organization, and in some cases it can go even faster than that. So now if you can automate that where you don't have a human doing that and you have AI just driving that from start to finish, you can reach a larger scale. Now, the thing that I always go back to, though, is that the same defenses that you should be putting in place today to try to prevent the attacks that we see today are still going to stand tomorrow. And so really it just comes back to, can you do the basics to make sure that you're stopping, whatever this next iteration of attacks led by AI could potentially be?
Yeah, and
it's super interesting. Go ahead,
David.
David. No. I was just about to say that, Jason is right, because it's almost ever increasing. Like, there's always going to be something. The next put X in there, right? So I guess cyber insurance is something that requires a constant massaging, right? So you're something that's always on the lookout for the next big thing. But and I remember, like, there was Log4j, they and some of the other ones, like the SolarWinds were like the atom bomb of cybersecurity, right? So what is ChatGPT? Is the next atom bomb, or what? Because there's always this like monumental events that happen, and then almost like things just kind of fade away, and people kind of got used to it, the new norm.
So I'll take a stab at this one. I'll just start with a normal caveat that what I'm about to say in this whole podcast is my opinion, but I think ChatGPT isn't necessarily a cyber threat per se. David, like, sure, as Jason mentioned, right, a lot of these threat actors can use the same type of technology and automation to create more efficiencies in cyber attacks, to make them more punishing, etc. But I think from an actual cyber insurance perspective, in the context of ChatGPT, underwriters are very closely watching how this technology develops. If anyone tells you that they understand what's going to go, how ChatGPT is going to evolve over the next year or two, I think they're making it up personally. And so I think the only answer to that, then, if from an underwriter, if I'm thinking from a loss vector perspective, what can go wrong, is look at two things. What is the ChatGPT model? And ChatGPT is a brand name, right? But what is the conversational AI model collecting from the end user? And how much exposure do we have for the algorithm and the resulting responses from a liability perspective? So that's very in the weeds insurance, David. But what that basically means is, okay, all these models that are out there, Bard, ChatGPT, to name a few, they're being beta tested because they want to learn how we interact with them. That show on Netflix, The Social Dilemma, whatever the guy said, like, if you're not paying for the product, you're the product. I think there's an element of that here, where they cannot beta test these platforms without having them interact with the general public. And so here we are as a general public being the beta testers for the software. So what type of information is being collected? Does that violate any sort of statutory privacy laws regarding what they're collecting? Or are you collecting information from the end user that you specifically warranted and represented in your end user agreement or licensing agreement, whatever, that says that you wouldn't? So you have a privacy component there. And then you also have just a straight technology liability component, in my opinion, where if you look at any technology liability policy, and Jason, you can talk to your friends on the underwriting side for this, but like Tech E&O is triggered when any act, error, omission, or misleading statement is made in relation to technology products or services that you provide to third parties. If my insurance is triggered by any act, error, or omission, I think there's a big exposure for underwriters to think about, especially underwriters that are looking at covering technology companies, software developers, all these types of firms that are involved in the discussion. And of course, it's never just one shop doing the development on these models, David. It's subcontractors and joint ventures and sort of discussions between multiple entities. So I think there's a huge old school liability exposure, and liability is old news in the cyber insurance space because everyone's been talking about ransomware and business interruption. But I actually see ChatGPT as much more, at least initially, as much more of a liability exposure, personally.
Well, David, I think that's an interesting trend because like we've started seeing situations where like privacy is becoming cool again, right? You know, you look at like BIPA, you look at like the pixel tracking thing. So I think it's a really interesting concept there because it's like you know, from a security perspective, right? Like when I have my CISO hat on, like we're looking at it from the lens of how do we protect our information that is going to all these different companies that are going to be collecting it, right? You know, ChatGPT, like they're recording everything there. You're seeing situations with, what was it, Samsung, right? Where some of their source code was potentially leaked as a result of their information, right? So like, I think there's a lot of this as companies are going through rapid innovation right now to release their own, you know, kind of ChatGPT, AI, whatever it is, right? Like take generative AI, get that in the hands of these companies. And when they're sprinting to get things out the door for functionality for their customer base, like you're kind of leaving the door open for these types of issues to pop up in the future.
Yeah, agreed.
You know, it's so interesting because I listened to Lex Friedman interviewing some of the founders of these technologies, and the one thing that we mentioned is that how you know, when you build something like that, first you test it out without connecting to the outside world to see if it even does what it's supposed to do, and you definitely don't teach it how to, for example, manipulate humans, right? So that's potentially why there was a petition to postpone the development of the next iteration of AI, the ChatGPT 5 and beyond, to basically let us control it and figure out what are the kind of the consequences, and maybe potentially put some security controls over it. What are your thoughts about that? This is basically we're building another fast car with no seatbelts, and we're trying to figure out as we go what happens next. Any thoughts about that?
The only thing I will say, and then I'll defer to Jason because he's way more technical on this. The only thing that concerns me about these models being pushed out to the public with all the beta testing disclaimers and all the nonsense that most people don't even understand is that we still don't understand how the algorithm works. Like there's a part in which our knowledge ceases and the code is doing its own decision making. That's what concerns me.
Yeah, I mean, listen, especially for me, right? Like I know vastly less about this than probably so many other people out there. And I would say even the experts are still trying to wrap their arms around this. But what was this, like 3 or 4 weeks ago, when you had a bunch of tech leaders coming out to say, hey, maybe we should put a pause on this, right? David and I were chatting before. I was like, this reminds me of when the nuclear bomb was created, right? Like that happened, right? And everybody saw the power of that, especially from a defensive standpoint. And now you created this nuclear arms race, right? Like I think we're in a similar, hopefully less deadly, position now where the capabilities are out there. And you have all these different plugins that are starting to pop up. So, even if, the top 15, 20, 100, whatever, companies that are developing this all agree to just pause, right? There are still developments that are happening in the shadows, right? And so, like, we've kind of just let, this is out of the bag now, right? The cat's out of the bag and there's no putting it back in. So we can try our best to try to put some constraints around this, right? But we're dealing with a lot of unknowns, and so even just from a governance standpoint, great, you can put some things there. We can put some government regulation in place, which I think absolutely has to happen. But you're still relying on people to try to follow the rules, right? And so.
And Jason, I would add there that the EU is trying to build a framework that is based on the importance of the application of the AI, and they're already finding that the model is somewhat outdated and can't keep up with the advancement of the capabilities. So
Yeah.
I agree that there should be regulation. I don't even think anyone has an
they're just super slow. And what's interesting, David, about what you just described is that they actually had OpenAI, ChatGPT outside of the realm of that compliance framework that they built because somebody was lobbying to keep it out.
Because it's a harmless toy, right? That's how they market it.
Hey, so before we kind of dive into to ChatGPT, I would love to start coming back to our initial discussion. So we had a kind of a primer past discussion, but I'd love to start kind of asking the questions. For example, and we're switching gears here. What are the key elements in a comprehensive cyber insurance policy, and in more so, how does that differentiate from a traditional policy elements? And maybe you can both chime into this.
Just for clarification, David, when you mean traditional policy, how do you want me to frame that?
Yeah, so when I mean in traditional policies, like the brick and mortar, right? So your house burns down, or your business burns down, or your there's tons of liabilities that are not, quote unquote cyber, even though cyber now kind of lends itself to all the different areas, right? So there's no really standalone cyber. It's got to be in conjunction with everything else, but maybe there's some key differentiators that you can pinpoint.
Yeah, so I would say there's two things to keep in mind, right? Your most businesses purchase property and casualty insurance. You buy insurance for your physical assets of the business, right? Building, whatever, and then you buy casualty or liability, sometimes product liability with that, what have you, for the exposure that you have to third parties, customers, businesses, etc., that you're trading with. A cyber insurance policy is actually quite unique in that it provides both of those coverages on the same policy, except that instead of insuring your buildings from tornadoes or insuring your ramp to your front door if it's icy and someone slips and falls, it's only insuring your network, the data within that network, and your ability to use that network to generate income for the business. So a cyber insurance policy should have two parts that make one whole. So if you imagine a pie, half of the pie is first party coverage that benefits the policyholder. The other half of the policy responds to claims from third parties arising out of different liability scenarios, whether it's data breach or technology liability, or in most cases, media liability. So I'll start with the first party coverages here. Any cyber insurance policy that's worth its weight should absolutely include what we call breach response costs or incident response costs. What this does is it triggers coverage to immediately engage a third-party privacy law firm. Sometimes they're referred to as breach coaches or quarterbacks for the incident itself. That lawyer, that law firm, will establish privilege so that whatever is discovered throughout the course of the investigation is, at least in an ideal world, protected by attorney-client privilege. Because once you have an incident and you investigate how it went wrong, ultimately there's more than likely going to be a situation where there was a violation of policy, a failure to implement a control, potentially a deliberate wrongful act by an employee, and you want to make sure that that information is privileged. So This third-party privacy law firm will then engage the appropriate incident response firm. If it's a ransomware firm, they'll engage a ransomware attack. They'll engage a firm that's skilled at ransomware. If it's business email compromise, or if it's just a standard data extraction event, right? It depends on who you need and what you need, right? So the policy pays for a privacy breach attorney, an incident response coach, and any other services that you might need to get your systems back online. If it's a ransomware case, maybe a threat actor negotiator, the entity needed to facilitate Bitcoin payment. Basically, David, the policy is there to help you get back online as quickly as possible and to investigate what went wrong. Once you've got the investigation in place, there's probably going to be some sort of element of business interruption. If it's a ransomware event, as Jason very well knows with their insurers, right? They're usually suffering. They're begging to get back online. Their systems are down. They can't talk to their customers. They can't email each other. They lose data, access to their data. The policy will also provide costs of lost business interruption income where you're unable to generate money for the business, and also any extra expense incurred to get back online. That business interruption insuring agreement can broaden out depending on what type of policy you're buying to cover non-malicious system failure. So, oops, we patched a server and the server went down because the patch didn't work. And it can also typically extend to contingent or dependent business interruption or system failure, where if I'm relying on a third-party technology vendor to operate my network or provide me technology services and they go down, my policy will pay me the extra expense. There are additional coverages that are thrown in, but I'll keep it short and sweet. They're mostly bolt-ons. So that's the fundamental basic first half of the pie, right? Your first party. The second half of the pie is sort of the liability portion of it, where if you have a data breach or if you have an extraction event, you have an obligation in all 50 states, I believe, to provide notification to the victims. In some cases, provide credit monitoring, identity theft restoration services. If it's healthcare information, you have to report it to HIPAA. If it's other information, you might have other regulatory stakeholders. The other half of the policy for the liability insuring agreement provides just straight defense costs and damages, settlements, regulatory fines and penalties where insurable, and any other payments that you have to make to third parties as a result of your actual or alleged failure to protect the confidential information that you're holding on your network. The insuring agreement for liability for the right companies will typically be expanded to include technology liability, which we started on today, which is an actual failure of your technology products or services that causes a third-party financial loss. And then there's usually a media liability component built into the policy for any sort of invasion of privacy, defamation, slander, etc., that might occur as a result of your web presence, your social media presence, etc. That is a cyber insurance policy insuring agreement summary in a nutshell.
that was amazing, David. Do you want to just ask you questions? Just so there are actuary tables, right? So somebody told me that somebody knows, for example, the odds of you walking on the streets of New York City and walking on one of those gutters and just falling right through. There's a percentage of that, and what's the cost of what you just described has so many moving parts, and I hear like, okay, cost. What is the cost of mitigating and getting the business back online? But there's just so many moving parts depending on the business type, depending on what type of incident that was, depending on when the incident was uncovered. There's just so many. How do you quantify? And maybe Jason, you can just chime in on that as well. How do you quantify all those variables? There's just so many of them. Is there like a matrix or like a table that describe all of that? And is there something
Yes,
you
Jason,
constantly moving? Good.
Please give us a secret sauce to underwriting, please, on this thing.
Yeah, listen, I have no actuary by any means. That is a whole field of study. But basically, it's the challenge in cybersecurity, right? Because if you look back at property, there are hundreds of years of data available to understand, what the costs are. And there are only so many ways, things burn, right? And so like you can kind of get your arms around what that's going to be. But there's a lot of different things that go into it. And like I said, I am not an actuary. So, take this with an amateur style kind of understanding here, right? But It's understanding, you know, the likelihood of something happening. It's understanding the potential impact of it, meaning, you know, what's the cost of that, and then also just trying to take into consideration catastrophe modeling, right? So if, you know, if a hurricane hit all of Florida and you were only writing business in Florida, property business, that would destroy you, right? And so that's the challenge in cybersecurity, is because it's really difficult to understand what the catastrophic or the aggregation events could be. Because if you have a log4j type situation where it actually goes and infects just millions of systems, that will destroy insurance as we know it, right? Cyber insurance as we know it. So all of these things factor in, and it really just becomes a math problem of, you know, what's the likelihood that we have here of something happening, and what are the potential losses, and then you can kind of back your way into how do you price for this. So it's probably one of the more complicated things in insurance, which is why I'm not going to give you an academic answer, because I truly don't fully understand it myself. But that's like the core essence, is trying to price for risk based on the likelihood of something happening and the impact of it if it does.
Yeah, David, I can just add a little quick thing. This is why cyber insurance applications are so long, right? Your business interruption exposure from a network resiliency perspective is a completely different set of questions than your data aggregation exposure. How many records are you holding? What type of records? How complicated they are? So we have a pretty good, I say pretty good, we have a pretty good actuarial discipline around, I think, privacy exposure and record count. We just know statutorily and with class action litigation how much it costs per record to remediate the situation, depending on how toxic the record is. So I think the actuarial models for data breach are actually getting pretty strong. The business interruption is still a developing situation. And then the only thing that I will close up with is what Jason said, which is absolutely right. I don't think anyone knows how to underwrite a catastrophic event. No one knew how to underwrite catastrophic workers' compensation loss until September 11th happened and an entire zip code was wiped out. Who would ever underwrite to that for workers' comp? You expect two people to fall off a highway or something like that. No one even expected that. So I think that's the big blind spot right now.
Well, and I think the key thing that's starting to separate things out is like, how much data do you have available, right? And so like that's why you hear all this stuff about external scanners and everything like that. And you know, we won't name companies or anything, but they're not all created equal, right? And so what I see is that, you know, you have kind of the initial version of underwriting, which was largely driven by the application questions, and you know, you can get so far on that, right? And then it's like, how do we bring in some of these external scans to give us additional data points? And then you get in the game of how can you predict the likelihood of something happening, right? And like it starts off in the world of, let's check for common security misconfigurations. You know, are they using Windows RDP? Because that's going to increase the likelihood of somebody getting hacked. And there's all these things here that you can get from the outside in. And that's important because, you know, we can go and say, hey, if you're using a weak form of email security, right? If you're not using an email security gateway, you're 2.5 times more likely of having a business email compromise, right? Like that is a really important data point. And something that, you know, should go into the underwriting process and should get back to the policyholder so that they can start investing in the right technology. But that's how you can start fusing these things together. If you bring technology and data into this game, combine that with the underwriting just mindset and how they look at risk and how they price for that with the actuaries, now you can get into a better position to really kind of suss out, you know, how do we price for these risks?
And then you by the quote.
let me ask you this: are there any levers that somebody can? Let's say you receive a policy, right? It's got all the, you know, everything that's included. And I know from looking, for example, at personal liability for vehicles, for example, there are levers you can pull and push, right? So you can say you can increase the you know, certain levels of participation. You can say reduce the risk associated, like the you know, the amount that is included, and then you can kind of tailor it to your requirements, and then maybe potentially to your risk level of comfort, right? Comfort in terms of how much risk can you take. Is that something that's also possible for a business owner, for an enterprise or business owner to look at and say, okay, I'm comfortable with only having $50,000 for incident response, and cap it at that.
Yeah.
I'm responsible, and then from that onwards, I'll be responsible for more. So that's the question. Can somebody play with those levers and tailor to their needs and their comfort?
The answer is yes, David. I would I'm gonna impose my personal beliefs on this question, because I think it's important that the audience understand the consequences of pulling those levers. So there's really three kinds of buyers, I think, Jason, in the space that we categorize: small enterprise, middle market enterprise, and large corporate. David, most large corporates, you were talking $1 billion or more in revenues a year, are buying what's called a no sublimit full limit policy to the extent that they can get it. So it's full limits incident response, full limits ransomware, full limits privacy, full limits business interruption, full limits everything. Because if I'm running $1 billion enterprise, I'm generating what, $3 million a day in revenue? That's terrible math, and maybe I'm a zero off. But there isn't a situation, if I had a catastrophic cyber breach, there isn't a situation where I wouldn't blow through the policy limits anyway. And so what I don't want to have is a fight with the insurance company where one insuring agreement is 50% of the limit and the other insuring agreement is 100% of the limit. And you and I disagree on whether or not our expenses should go in the half bucket or the full bucket. Which one fills up faster, the half bucket? So large corporate buyers will typically buy full limits everything because they want to have the freedom to move through the insuring agreements without having to worry about maxing out the limit. Middle market, 500 million in revenue and above, is generally the same situation because they're big enough that they can afford to spend the money on a full bells and whistles policy. To your question, David, specifically, a lot of the smaller insurance providers, let me rephrase that. A lot of the providers of cyber insurance to the smaller mid-market space do allow you to pull levers, right? So if I'm a $1 million dentist group, right, with 4 or 5 offices, I absolutely have privacy exposure. There's no question there under HIPAA and everything else. And I probably have some sort of business interruption exposure because either I'm doing the IT myself, which is horrific, or I'm outsourcing it completely to a managed services provider. Either way, there's exposure. Therefore, this $1 million dentist needs to buy coverage. The question then is, how can you tailor the policy to create the most cost-effective solution for the client? And the answer is very simple. You have to do the work to understand the risk. We've had a lot of our trading partners on the post-incident side, specifically forensic accountants, and there's someone who's going to see this video is going to love that I mentioned this, but specifically forensic accountants are saying you can inform yourself on how much business interruption limit to buy by understanding how severe and how your worst day looks like from business interruption exposure. So if I'm telling you that I'm generating $50,000 a day in income for XYZ Corporation, and we've done a full stress test with whoever we want to do it with, and they think the most feasible outage is 1 month, you probably need only $1.5 million in business interruption coverage out of a policy that has a total policy limit of $3 million. The flip side of that discussion, David, is that if I'm a manufacturing company generating widgets all day and I have 3 employees doing it, my privacy exposure is almost nothing, but my business interruption exposure is catastrophic. So you could probably reduce the privacy liability limits where you're paying for credit monitoring, ID theft, and restoration service, etc., to what aligns with the risk, and then really focus on the rest of the premium to the business interruption component. My warning is, as I said when I started out with this, don't be cutting down limits if you don't understand your exposure, because then you're just playing the loss lottery and you're hoping that the one time you have the claim come in, it's going to be covered by the policy. And I will tell you, with my personal experience with Murphy's Law, it's not the right choice unless you know what you're doing.
Well, I think that's the key point, right? Like, this is why you work with David Anderson and insurance brokers, right? Because
doom and gloom. Yeah.
But this isn't like buying pet insurance, right? Like, I mean, I just bought pet insurance, right? It's like, okay, I know what's covered because it's clear as day. I know it's not covered, right? The general tests or, visits, whatever. And I'm just like moving the lever on how much do I want my, my retention to be, my deductible, and like, what am I willing to have for the total limits, right? Like, in my mind, I can just get a good grasp of, you know what, these are probably in the worst case scenario, this is the potential loss I'm looking at. And so it's a very easy calculation to make. But with cyber, right, like nobody knows what the proper, like what's an average amount for an investigation, what's the average amount, like nobody even knows what goes into responding to these attacks. How is a business owner, especially in the SMB space, expected to understand? So like you need to have somebody that knows it, like David, that can go in and walk you through that to really get it. Because like the day we get to like, you know, a self-service model in cyber insurance that I don't think is going to happen, I fear for those business owners, because they're just going to have expectations that like, oh, I bought cyber insurance, so you know if I get hacked, then everything's taken care of. And like that's typically where things go wrong. Even in today, when people are working with brokers, like there's an assumption that's made along the way on what's covered and what's not. And this is how you lead to this point where it's just like, well, cyber insurance doesn't pay out claims, which couldn't be further than the truth. Is because like there's a fundamental misunderstanding about what you really are buying and what you're getting for that.
Well said.
And Jason, let me ask you this. So you are a CISO for the company, and your job is to assess the risk and quantify it and manage the risk associated with it. How does the CISO, if they are involved at all with the underwriting process, with the insurance companies, do they have that communication, basically bounding to work together to make sure that we have a clear assessment of the risk that there's nobody better knows the risk than the CISO for the organization than you do. So how do you guys, first of all, how do you quantify the risk? How do you manage that internally? And then how do you communicate that back to the insurance company and the brokers to make sure that they have a clear understanding of what the risk is?
Yeah, so there's a couple things in there. One, if you have somebody telling you that they've quantified the risk internally, they're lying to you. That they're just flat out, right? Like there's no mature model out there that works. If somebody is doing it, and there's companies out there that try to do this, right? There's fair methodologies and things like that where you can put a number to it. I have yet to find something that lines up with reality, right? So
don't put up a number, but it can be off by 50%.
Exactly.
Yeah.
So like, I think we got to put that to the side. And the second part of this is, maybe this is a controversial opinion coming from a CISO, but like, I don't want to be the person buying insurance. I should not be the person buying insurance, right? Like at the end of the day, the CISO, the security expert, the IT expert, whatever it is in your company, depending on your size, they are an input into understanding the potential risk and how you offset that with insurance. But at the end of the day, insurance is a business decision. The CISO should be contributing to understand that. But even having worked, I've worked over a decade in incident response. The majority of that has been, kind of riding the insurance wave, and 2 years in insurance, right? Even to this day, with all of that experience, I still would not feel comfortable making a decision on insurance in of itself. So, the typical process that I see, and David, I'd love to see what you see on a wider scale, is you've got a CFO or a risk manager that is working with the broker to figure out, what's required from a business perspective. And then the CISO is an input to that of, I'm going to work to fill out the application to understand what the risk is. And I'm here to help put the business in the best light possible on how are we managing the security of our company to help get the underwriters into a comfortable position that, hey, we're not a risk, or we're less of a risk than, these other companies out there. But like, I should not be the one choosing limits, anything like that. Like that's really got to come from more of that business perspective and working with somebody with David. So I'll be an input, but I'm not a decision maker in that.
Yeah, that's exactly how I tackle the pre-underwriting discussion, Jason. David, as we've kind of talked about and discussed, applications are long. There's a majority of it that is the CISO's responsibility. There's no doubt that is a CISO's responsibility, but there's also records retention questions. There's advertising and media controls questions. There's procurement questions. There's legal and contracting questions. So if I have a client who wants to really go through the risk discovery process in an informed and coherent and honest way, this is really a board level and audit committee level discussion. If it's a smaller business, it's probably just getting legal, procurement, HR, whoever your privacy and data protection stakeholder is. It may not be your CISO. And obviously the CISO in the room so that we can understand what the company is doing as a whole to mitigate cyber risk. If you're not doing that, and if you're just throwing the application at the CISO, you're not going to get the full picture, and you're not going to be able to tell a story to the marketplace the way that you need to. The only thing I would add here, and this is always in defense of CISOs, because I find myself in discussions with the CISO and the risk manager, or the CISO and the insurance stakeholder, and there is some sort of implied discussion at the company, and this is for all you companies out there listening to this, that any money spent on insurance is almost like a zero-sum game with the CISO's funding. That is completely inappropriate. We see it so often in the space where the CISO is playing defense on his budget dollars because they don't want to lose budget dollars to buy cyber insurance. But in reality, cyber insurance spend and your CISO's budget for his team should run in parallel. Organizations that have this sort of headbutting never present well to the marketplace, and it is a total disservice to the enterprise. Your CISO should feel comfortably staffed and funded for his own projects. The insurance is there because despite what your CISO does, no matter how hard he tries, someone is going to click on a button somewhere and it's all going to go to shit. And at that point, and at that point, you're going to have a discussion of, well, we decided to fund the internal team less because we wanted to buy insurance, or we bought less insurance because the CISO wanted more money for his team. Then you're in a real problem.
Go ahead.
Yeah, it's funny. Well, maybe it's not funny. One, you just scored major brownie points with every CISO out there, so kudos to you for that. But two, it's like, there was a lot of conversations that I was fielding with CISO friends around, hey, like, you're going to reach a point with premiums for insurance policies that it's just like it's going to make more sense to self-insure, and like I'd rather put that money into beefing up my security, right? And I think it leads exactly to what you're saying there, right? Like, this is not a this or that, right? It is an and, right? Like, typically these rates are rising because threats are also advancing, right? And things are getting harder in security. So, I always look at it, and I'm biased, obviously, right? Because I work for a cyber insurance company, but like I truly believe, and I believe this before I joined a cyber insurance company, right? But there is nobody that is vested in your interest of keeping you safe as much as a cyber insurance carrier, right? Because like when you lose, the cyber insurance carrier loses as well. And so, I look at it as, what are the things that they're asking on this application? It probably means it's important, right? And they probably are seeing things that maybe I don't, right? And so like, there's a reason why so many cyber insurance carriers out there want you to have MFA. There's a reason why they want you to have EDR, endpoint detection and response. There's a reason why they want you to have backups, because these things work, right? To give you an example, right, with we saw it with Corvus Insurance, where when we started mandating secure backups, key emphasis on secure there, not just backups, keep them secure because attackers will go after them. But when we started mandating that, over the course of a year, we saw a 35% decline in the ransoms that had to be paid because people had backups available for them. And this was before, data exfiltration became, mainstream on every single engagement. That's spiking up, right? But like, there's a reason why these controls exist, because they do work and they do minimize your risk, and they reduce the severity, the total cost of these types of incidents.
And this is fascinating, and I want to be cognizant of the time. We kind of go over, but maybe like ask one more question, and then we'll kind of tailor the discussion for the next one. At what point in time, obviously you work together. The CISO works together with the insurance companies and the brokers and so on, and everybody says, sing kumbaya when we're writing the policies and so on, but once an incident happened, potentially, depending on the outcome and depending on the underlying conditions of what happened, that relationship can go sideways pretty quick. I believe. Maybe you can kind of correct me if I'm wrong, but there's going to be a point where all of a sudden there's finger pointing. The CISO may or may not be responsible for the event, and then the cyber insurance will have some claims according to what exactly happened and so on. So talk to me about that kind of dynamics, post incident?
This is something that has really become a key underwriting point for large corporate buyers, which is culture, David. So if the event happens and finger pointing starts, you're dead in the water already. It doesn't matter, right? So underwriters on the large corporate side are really asking for proof and evidence that there is a tested incident response plan where everyone acts like an adult, everyone comes to the table, and everyone has a strategy for how to deal with it. If you are not practicing how to respond to an incident, then you are at a much larger disadvantage to any of your peers who have practiced, because that finger pointing goes on, and it's only to the insured's detriment, and Jason, to the insurance company's detriment, because the clock is ticking and the money's flying out the window. But yeah, we've really seen that sort of question around culture and how there's a tested and regularly tested incident response plan has to be somewhere within the organization. Otherwise, you can have everything in place, but because everyone is panicking, you're not going to be very effective at responding to the incident. And it all starts with knowing who to call, who to get a hold of, and how to get everyone in the room without the benefit of having your email server running or your internal communications software running. You have to have a plan that is akin to like a disaster recovery plan for a tornado or an earthquake. Really, a paper binder.
Jason, any comments on that?
Yeah, I think that preparation goes a long way. And you need to understand how you're going to respond. You need to understand how you can continue to operate your business when something does go wrong. I think too, there's a hesitancy to share information with your insurance carrier, and I totally get it, right? Like if you don't necessarily want to air your dirty laundry, and frankly, like I don't want to know about all of it either. But there is something here that if you do have an incident, right, it's really important to show, hey, we had something happen, and yeah, we were a victim, right? Totally get it. But here's what we learned from it. And here's what we're doing moving forward to remediate that issue, right? And this isn't about going and buying a bunch of tools, right? Like I actually will discount it more in the sense that we're like, if you're just here to like open up a blank check and not do something thoughtful, it makes me more worried than if you're actually sitting back and saying, what was the root cause here? How can we try to prevent this moving forward? And how can we, going back to culture, right? How can we create this new culture at the company that really does put security first? And, I think in terms of, what happens after that claim, it's really dependent on the markets, right? There are some carriers out there that don't want to deal with that. And they're going to say, no, like, sorry, you're done, right? And, go find somebody else. But there are probably just as many carriers out there. There's like, if you give me a good roadmap and show me that like you're taking this seriously, there are a lot of carriers that fully believe that you're a better risk moving forward, right?
Yeah.
Because you are investing more in security.
Yeah.
But that starts with a conversation and some transparency. Maybe not full transparency, but enough to show that you're doing all the right things. That sort of thing goes a long way, and that's the partnership that you really need to build with your insurance broker and your carrier, so that you can really establish some of that trust. Because I think that trust is what goes and spans across claims. Is what? Yeah, we know what happened. Here's what we're doing to fix it, and we're taking this seriously.
And let me ask you the last question. When something happens, at what levels is there communication between the insurance company, the carriers, potentially the brokers, and the executive team at the company? So it's not, because I'm assuming everybody's involved because on a day-to-day basis, it's mostly the CISO and the broker and so on. And yes, we all kind of talking and figure things out. But when an incident happens, all of a sudden, all eyes are, on the dashboard and see what's going on. So at what point in time, and maybe describe kind of the relationship between the carrier, maybe potentially the broker and the executive team, and what kind of dynamics are we talking about during an incident and post-incident?
Yeah, so typically the process will go, you have an incident, and because you're a good company, you've had an incident response plan and practiced this, right? You know who to call, right? Sometimes the insurance carrier is going to have a hotline or an email address that you can contact immediately. Sometimes you'll go through your broker, and eventually it's going to make its way back to the carrier here to essentially just say, hey, like we have a potential security incident here. And like this is where the start of how an insurance carrier can help, because they're going to have a panel of incident response providers. So the privacy attorneys or breach coach that David had talked about before, your forensics company that's going to help drive the technical response. And so you'll get on the phone with a claims person and potentially your broker, hopefully at the same time, to talk through what's the situation on the ground. And then that's going to allow the insurance carrier to navigate on like, how can we try to get you the right resources as quickly as possible to minimize the damage as much as possible. And then from that point, the carrier kind of steps back a little bit, right? And they're going to let the experts run their thing. But there's still going to be updates that get back to the carrier. How are things progressing? Are we on target for the statement of works for the response efforts, right? Because the insurance carrier needs to understand, what is this going to be costing, right? Because there's a lot of stuff that they have to do on the back end there. So that communication, it can vary depending on the response firms and the companies, but typically at this point, like the executive team at these companies are engaged, because like when it's reaching the threshold where you need insurance's help, typically that's some impact to the business. And so there's conversations that are happening there. And then that just progresses through the end of the response efforts, right? And it might go beyond that. With business interruption, that's not something you figure out, the day after you get back up and running, right? There might be months of conversations back and forth to understand the damage and everything there. So, there's a tail to these things. And so communication does happen, but it could be sporadic at times. But, that's really up to the situation, what that right cadence should be.
Yeah, I would just add real quick, David, the broker should hand off the claim to the insurer and ultimately the panel vendors. Insurance brokers are not considered part of privilege. So I always tell my clients, I'm going to put you in front of this team and I'm going to hand you off to them, because I cannot be involved in confidential discussions, because the legal theory of privilege doesn't apply to brokers from my personal understanding of it. The other thing that I would add is at that point, the broker exists on the sideline to handle any coverage issues. Obviously, I think everything is always covered, right, Jason? But really, we're there to sort of help understand any coverage discussions, any coverage questions, any disagreements between us and the insurer. And then the final point here is the culture of practice and rehearsal results in less confusion of who needs to be involved in those discussions. So what we're hearing from the incident response providers, the breach coaches, and the IR vendors is, we don't need to be talking to 10 people. I need 2 or 3 people that are my key points of communication that can make decisions on behalf of the company. Because the policyholders who are least practiced and least rehearsed, David, are spending insured dollars with vendors on the line at thousands of dollars an hour, arguing about who's in charge of what part of the process. That should not be happening. And that's where being a rehearsed organization that has a list of people that need to be contacted fare way better, because they're not spending an hour figuring out who's in charge of what and who to call.
So the problem is, every time you answer a question, I have 2 more questions that come up, and we'll cover it next time. Like, for example, my first question will come up, and we'll start covering is, how do you conduct an efficient and effective exercise? And we'll start with that. But
That's
before, yeah, and it's awesome because we kept saying this is something everybody should do, and it's not trivial. I think a lot of companies do not have that in place, and nodding your head. But before we part ways, this was awesome. What's the easiest way for people to get hold of you guys?
So I say follow me on LinkedIn. I'm super active on there. So just search for my name and connect.
Yep, same here, David Anderson. It's not a very uncommon name. So if you put in David Anderson, CIPPUS, I will come up.
Thanks, guys, and looking forward to episode number 2 next time, and hopefully I'll figure out the technical aspect of it, and you guys don't think I'm a bot chatting with you, because thank you.
All right,
again,
guys. Thank you so much.
Thanks,
Take
guys.
care and be safe out there. Thank you.
Bye.